Good morning and welcome to the market forecast for Wednesday, December the 2nd. I'm John Hoagland. Thanks for trusting me with your time. Talking to you from a very chilly Chicago suburbs this morning. Hopefully, if you are in the markets, they are headed your way already. As always, we're going to take a look at our six of our favorite markets: the mini S&P 500, the Nasdaq, the gold, the crude oil, the euro, and the Japanese yen. We're thinking about adapting some, or maybe one or two of those markets in the coming year. Or if you have suggestions for that, please let us know. Markets open already. Economic data already out. At 7:15 this morning, Central Time, the ADP employment numbers came out a little bit less than they were looking for. They were looking for an additional 410,000 new jobs, only 307. There was a slight adjustment to the last release that was a little bit higher, but maybe an indication of a little bit of slowing of new employment here in the U.S. That's going to be something we're going to need to keep an eye on, especially in the next couple of days. We got a lot of data coming out the next couple of days as far as that information. We do have tomorrow. Let me bring this up and make sure I got the right thing here. Jobless claims tomorrow at 7:30 Central. Unemployment numbers Friday at 7:30 Central. So lots of employment data due out, possibly moving the focus from or of traders and investors from the vaccine to possible new information as far as employment is concerned. The stocks driven vaccine rally seems to be taking a little bit of a break today. We don't know what's going to happen. We're going to take a look at the charts and see what we see here shortly. As far as other news, the Biden administration says after inauguration, he's not going to be easing up on China, at least not initially. He says he's going to keep the Trump tariffs again initially. He's going to continue pursuing policies targeting China's abusive activities, including stealing intellectual properties. So, as far as crude is concerned, price is just kind of wandering lower as OPEC continues to bicker about production in the coming year. The API announced last night an additional 4.1 million barrels in additional in additional stocks here in the U.S. The EIA is looking for a draw, actually, of 2.3 million barrels. We're going to see what happens. Many of these markets dealing with important inflection levels in the form of the the weekly kickoff levels. Couple of important things as far as gold is concerned, and a possible change in the S&Ps. We're going to take a look at that shortly. I always want to say good morning to everybody, and we have Danielle here, first in the room. You win the prize. Guten Tag, Andrea, Charles, Bodie, the Bodie Wildheart Show. It only says Bodie Wildheart. MSS Capital. Good morning, Shane. Good morning. Vladislav, Brian, Lacey says good morning back. She's laying in the sun and over there in the kitchen. Felix, good to see you. Mike, Roman, Vast West, Nick Mo, Kevin, Prima, Tim, good to see everybody. Tanya, good morning. Laura, Shane, Murph, good morning. Doyle, Angelina, Troy, France. France, I think I saw something about you succeeding and moving forward on our Facebook page today. Congratulations, France. Kevin, Guy, good morning. Ron Redmond, good morning. I'm on my umpteenth combine reset. Well, it is a process. It is a journey. All starts with risk management, and that's our focus here. Is we're looking at these markets in context, using the lens of risk management for anything that we are looking for or thinking about doing. It is not easy, Tanya. Absolutely right. Good morning, George, Charles, Esteban, Ron, and John Doherty. The dancing bear is here. What an interesting day for him to be here. There might be a foreboding indicator or a foreboding pattern in the S&Ps today. It's going to be interesting to see how this day trades out. Good morning, Christopher. Good morning, KJ. Good morning, Art W. I'm going to put this URL into the room right now. That is the link to the group coaching today at 1 o'clock. That's with just me, but today we do have the good doctor, Dr. Andrew Menaker, 3:15 today for market therapy. This is the link to sign up for that. You're going to have the opportunity to listen to the good doctor. He's going to be talking about how the words we use for our trading can affect our outcome. If you view trading as a battle or a war, or if you view trading as surfing or golf, all of those have an effect on your possible outcome. It's going to be an interesting one. I hope that you all show up. You will have the opportunity to ask direct questions of the good doctor, Andrew Menaker. Again, that's today at 3:15. Sign up. Love to see you there. Bring your questions. That's right. My risk management is surely the biggest issue. Usually is for most, Ron. Can't give up. Absolutely. Good morning, Keith. Good morning to see you. Good to see you. All right. So don't forget to like, share, comment, question, feedback, heckling, and subscribe to our YouTube channel. Of course, heckling is always welcome. Looking briefly at the VIX and the dollar index before the market forecast this morning. VIX is up a little bit today, 2109. Dollar index was just about even from yesterday, 91.31. Still kind of dragging along the bottom of that 52-week low that it's been on. So interesting. Always opportunities. Let's go ahead and jump into these charts, and we'll see what we see here. As always, starting with the daily in crude, we have the market wrestling still now with the weekly kickoff low of 44.50. The market just opened right on it. It is waiting for more information. Once again, the API announced a 4.1 million barrel boost yesterday in crude inventories. EIA, due out at 9:30 Central today, is looking for a draw of 2.3 million barrels. So a little bit of conflicting information there. We never know what they're going to say. OPEC, still questionable. OPEC, still wrestling back and forth on what they're planning on doing for production over the next, let's say the first quarter of 2021. Weekly kickoff in play, no help from open interest, only adding 1,000 in open interest yesterday. We are taking now a look at the 30-minute chart. It looks as though we've left our opening range at the low of the regular trading hour session, but I don't want that to alarm anybody. We have our weekly kickoff level here which has been supportive. We could not close below it yesterday. Settlement is 44.55. We're looking at 44.50. This is actually in the wrong spot here. I'm going to move this up a little bit. So we've opened in range, in value, unable to close below that level. Opening range is the low of the regular trading hour session. That can indicate buyers in control early in the session. But again, that seems to be a little bit more helpful, or a little bit more important information when the market opens outside of the previous range and outside of previous value. All we've done is we've brought price back to point of control, back to settlement. We think we're going to be working this weekly kickoff level as kind of pivotal today, but be careful about that. I'm going to just try and stay patient. We know that there's information coming out at 9:30 that may seriously change the face of this market. I'm going to be ready. I'm going to watch what happens. I'm going to respond to the responses of that number at 9:30 if it does provide opportunity. Other than that, I'm really not that interested. Still not that interested. I wasn't that interested in it yesterday. Still not necessarily that interested because of the current situation inside value. No real change in perception of value of a barrel of crude oil doesn't bring us a lot of good opportunities. S&Ps. Okay. The markets are always fascinating, aren't they? Open interest, adding 9,000 at an all-time high like that and not being able to maintain the rally through the session tells me that that's probably weaker hands traders. Those are laggard buyers, new longs, getting long right at the high. It's typical when the market, one of my dad wisdoms has always been the market always looks the best at the top and the worst at the bottom. Well, we just, took out in regular trading hours our previous high, which was in extended trading hours. We've been waiting for that to happen. Did we bring in new buyers? Did we bring in new business above there? If we did, it was short time frame traders. So, we've got kind of an inside extended trading hour range here so far. No acceptance above weekly kickoff high yesterday. What are we creating here? We talked yesterday about having an island low in gold, and it certainly provided a decent upside opportunity for us yesterday. But we are at risk of creating an island high, an island top here in the S&Ts. We gapped open from Monday to Tuesday. This is Tuesday's range right here. If we leave a gap here and we can't close this gap today, we're right on the border of it. It's gonna be iffy to see if we create a gap here. And if we can't close this gap, that's going to leave this day session range as an island, and that's going to be a pretty negative structure or technical pattern, if you will, to see if this market is going to turn around and head lower for a little while. So I'm going to be watching the open, watching how this market responds. If we open in range from yesterday, that's fine. My concern is that if we do open with a gap and can't close the gap and head lower, it's going to leave this island top, and that's going to be an ominous signal for longs. It's going to be a signal that might have me starting to look for the opportunity to sell rallies. And how fitting for the dancing bear to be here today. All right. So, yeah, that unfilled gap lower, that possible island top here is going to be something I'm certainly going to be watching. If we open with a gap and can't close it, and we start heading lower, I'm going with that. The gap is measured from regular trading hour session high and low to regular trading hour session high and low. Okay? NASDAQ. No real change in open interest. We actually added 700 in open interest, probably laggard buyers. We have, it's pretty weak at all-time highs. It was kind of, a little bit better yesterday in the S&Ps, but still not a huge number for the situation that the market was in. So again, inside day in regular trading hours, really finally just taking out the previous all-time high. Take a look at the 30-minute. We eked out a close above this weekly kickoff level here, okay? The market was rallying. It had a hard time holding that rally near the end of the day. It looks as though the market is going to open in range below value. We do have a potential island situation, just like in the S&Ps. If we were to gap lower and we were unable to close that gap, that would create this island situation. It's less likely in the NASDAQ, but it doesn't mean that it can't happen in a few days. In a day or two, we could range here in the NASDAQ. We could range in the S&Ps for a day and then gap lower again. And if we can't fill this gap in regular trading hours, it can still create that same opportunity. So without trying to color your thoughts about the market, you have to trade what you see. We've had a hard time holding above weekly kickoff high, which is pretty close to settlement. Are we getting a little bit too short in overnight inventory? Quite possibly. So I'm going to try again and stay relatively patient. I'm going to look for a market, look for an opportunity to come up and possibly take an execution up against this weekly kickoff level here, which is 12,445. Settlement, just to put it on your charts, in the NASDAQ, 12,452 and a quarter. I'm going to try and stay patient. While the NASDAQ and the E-mini S&P are related instruments or products, they certainly do sometimes present differently. The Dow yesterday was a completely different situation. All right. So look at the gold now. Okay, the gold is one of the situations that we talked about yesterday was a possible V bottom here because of one of those island bottom type situations. We lost 3,700 in open interest yesterday, probably some late to the party shorts that got stuck down here at the lows. Weekly kickoff high should now be support. It was supportive overnight. Weekly kickoff high again is 1809. It's my first address when I moved to the city of Chicago, 1809 Lincoln Park West. A number I'll never forget. The open interest loss again, probably some trapped shorts. Take a look at the 30. Okay. So here's the island bottom that we were discussing yesterday. We knew we were going to opening with a gap. We were unable to close this gap, which leaves this as an island and is a positive. Okay. We're looking at that V bottom yesterday because of this island low. Some decent opportunity to upside yesterday off of that weekly kickoff low. The market's continuing to look higher. The opening range remains the high, the regular trading hour session. What does that mean? Well, so far we've had seller control in gold up until this point. The opening range is the high of the opening range, 1828.30. Keep that number in mind. If we get back up there and we get through there, we may see some new buying coming back into this market, and that may kind of continue to create a truth in the hypothesis that we put forth yesterday of a V bottom here due to this island low right here. Islands are really only created by regular trading hour session. You can see, in extended trading hours, we started to gap lower here. We gapped higher night before last and traded up here. So these regular trading hours islands that the market leaves are hard to see on a regular chart. You want to be looking at a regular trading hour session only chart or in a 30-minute chart to know where the regular trading hour ranges are to be able to spot these. So the market opens. We've left the opening range at the high of the regular trading hour session. We've taken the market back to value high from yesterday, which is just about I'm going to go with the market took a move to about the half back from yesterday before finding possibly some buyers. I'm looking at this pushback as an opportunity to buy the market in weakness. There's lots of levels to look for to buy this market in weakness. There's settlement, there's value high, point of control, value low, overnight low, weekly kickoff high, which was supported, which is now supportive, okay, that 1809. So where am I going with this? I was looking for opportunities to let this market come down. I'm not that concerned about strong sellers off this week, this opening range high here. I was looking at that as okay, maybe that's an opportunity for a short in a short time frame short. Nothing I want to fall in love with, but it's going to offer the opportunity for me to try and trade in the direction of the market that is congruent with my hypothesis. I think this market is heading higher due to this island bottom down here and the fact that it's holding weekly kickoff high here. If it can't hold weekly kickoff high, if it closes that gap, then it's going to totally change that hypothesis. But for now, I'm trading what I see, trading what I think, and that's what I'm looking at. So take a look now at the euro. We had a pretty decent up move yesterday. Hopefully you were able to take advantage of some or all of that. We have now support coming in at weekly kickoff high. That weekly kickoff high, 2037. We got within 6 full ticks of it last night. The market in short time frame Well, I'm going to say medium time frame. We're seeing higher highs and higher lows, looking for opportunities to buy weakness in this market. And this weekly kickoff high would certainly be one of those levels that I would look for if given the opportunity. Medium time frame structure continues to the upside, kind of range bound for quite a while here, but the medium time frame has us putting in higher highs and higher lows, which puts me on the side of looking for opportunities to buy weakness. Taking a look at the 30-minute chart. Opening range, low of the regular trading hour session, right here. Okay, the opening range low is 120.66. We do have a gap. We have been unable to close the gap, and the rule is if we can't close the gap relatively early, we look for opportunities to trade in the direction of the gap, which would have us looking for longs, have us looking for continuation to the upside. Not really seeing all that great continuation. The market still has left the gap here, which should be supportive. As long as we hold that gap, we're thinking longs. If not, there's a couple of opportunities for us to start to look for longs at better trade location because of the market state. We think that the market is still a market that we want to buy weakness in. So, point of control. Settlement 120.51, also point of control. Of course, our longer time frame level here, 2037 weekly kickoff level, would be an interesting area for an execution as well. So try and stay patient. I know that the market opened out of balance, out of range from yesterday, but I think there's probably some better trade locations coming on as the day goes on. And the Japanese yen, finally, we're starting to see a little bit of participation outside of our coil, outside of our kind of pennant formation that we've got going there. The short time frame structure is still looking lower. We're seeing lower highs. Now we're seeing even lows. Open interest dropped about 4,700 yesterday. That's a pretty big drop in a day that really didn't have any directional indications, if you ask me. Some folks just said, you know what, the heck with this, I'm getting out. Why? Central location between weekly kickoff high and weekly kickoff low. We've got these weekly kickoff levels set pretty far apart because I think that the market is over the long haul holding upside structure. We've got higher lows. We've got higher highs. In the middle here, it's more like we're looking at short time frame activity. So, these are just hypotheses. Again, nobody knows 100%. We're just looking at where the price is compared to important inflection levels or trend lines, and we're pretty far away from it. We've now broken below this. Might be an opportunity for us there. I did not see that the opening range was either the high nor the low in the Japanese yen. We've got settlement right here, 95.79.5 ticks. The market continuing to put in lower highs, lower lows. We've got some considerable overnight shorts in this market, and it appears as though those shorts have now closed any gap and perhaps might give us an opportunity to look for shorts at better trade locations. How about settlement? How about point of control? They're pretty close together here. So again, with the market opening, it looks like it did open with a gap, has closed the gap, giving me the opportunity to relax and look for better trade location as the day goes on. Hopefully that has been helpful, and it's Wednesday. We've got a lot of trading coming on for the rest of the week. It's only Wednesday. We've got 3 full regular trading hour sessions here. I'm seeing a question here: which trade station had volume profile? Ron, they do have an add-on. Look up Indicators by Harvey. Indicators by Harvey. He's got a volume and a market profile add-on. It's in the App Store on TradeStation. You may not be able to get it directly through the App Store on TradeStation, but if you look it up, he's got his email there. Tell him I sent you, and see if he can hook you up with the volume and market profile add-on for TradeStation. Vlad is saying, yes, there is volume profile on TradeStation. Okay. All right. So, a big day today. We've got group coaching. We've got market therapy with Dr. Menaker. Looking forward to seeing you all there. I'm going to take my deep breath, be ready for the Equity Open here, which is in just a couple of minutes. Don't like to go too long here because I want everybody to kind of settle in and be ready for the Equity Open. Take your deep breath. Be humble, grateful, and creative in your trading today. Get out there and profit. Dan will be here with you for the market recap at 3 o'clock. I want to see if I can't join. Have a great trading day, and we'll see you. I'll see you back here. Well, see you for group coaching. See you for market therapy, and I'll be back here with you tomorrow morning at 8 a.m. sharp. As always, trade well, everyone.